afternoon, good evening. My name's Dipesh Patel, editor at Trade Finance Global and host of the podcast Trade Finance Talks. Welcome to this BAFT on-demand leaders interview as part of the BAFT Virtual International Convention 2020. Today, I'm joined by Natasha Condon, Global Head of Core Trade at JP Morgan. Natasha, thank you very much for joining us on Trade Finance Talks.
Thank you for having me.
Great. So let's get started with my infamous 30-second elevator pitch. So in 30 seconds or less, who are you, where are you from, and what do you do?
I'm Natasha Condon. I am the Global Head of Core Trade at JP Morgan Chase, a role I have held since May of 2020, which meant an interesting start to the job in lockdown, and I still have not met a single one of my direct reports. I was previously at Citibank for 16 years, where I was most recently the Global Trade Sales Head. I'm British, I live in the UK, and I'm currently speaking to you from the poky little room at the back of my house.
Great, and we're both in London, I hear. So let's start with a big question, I guess, for the big role that you cover: US elections, COVID-19, a changing world order, and also the rapid digitalization of trade. Those are some of the big things that have been happening since you started the role in 2020. What out of these events, in your opinion, have been the biggest challenges for global trade in 2020, and why?
I feel like the easy answer is to say the pandemic. Clearly it's been a gigantic challenge. 10% I think is the current estimate of the drop in global trade, though I've seen anything from -20 to -30 earlier this year. Clearly we all had to scramble. We had the enormous effort to transfer to working from home. But I wonder if when we look back on 2020 with maybe 5 or 10 years worth of hindsight, we will see the pandemic as something relatively transient in terms of its effect on global trade. And actually, from your options there, it's the changing world order that is the one that will make the real permanent change. It's the reconfiguration of supply chains around the relationship between the US and China, the long-term impact of Brexit, the various other protectionist moves that are happening globally. I feel like in the long run, that may be the real issue that we all have to work around.
Thank you, and good point about I guess the pandemic potentially being a catalyst for things that were happening anyway, and this kind of sped those issues up. So, as one of the largest banks in the US, how has JP Morgan been helping its corporate customers since the onset of the pandemic?
I'm going to answer that with respect to trade, obviously, because JP Morgan has done an enormous amount, I think, around the pandemic in an awful lot of different areas. But for us, I think for me, very much in two different areas. First is digitization. That's the obvious one. Many of our clients were left, in lockdown in various different markets. Paper documents couldn't move, trade transactions got stuck, ships were piling up at the ports, and we all had to scramble. I'm sure this is true of the whole market, to get various forms of digital solution up and running as an emergency to make sure our clients could keep working. People who were stuck at home in lockdown couldn't sign documents. So on the one hand, a big digital scramble to make sure that our clients could continue to do business. But I think the other one is very much around how our customers have looked at supporting their counterparties and where effectively funding has gone during the pandemic. There's been a lot of focus this year, which I think is wonderful, on supporting perhaps smaller counterparties who may not have great access to liquidity, especially in an environment like this where there's a bit of a flight to quality effect. That's very similar to what we saw, I guess, in 2008. But what is also different this year is that there's also a lot of focus on supporting counterparties who may be, for example, minority owned. There's I think a strong determination that, we have the chance to drive sustainability goals, drive ESG goals, even in the teeth of the pandemic. And I've seen a lot of demand for that from corporate clients. So to me, on the one hand, there's the digital piece. That means keep trade flowing. But on the other hand, there is a chance to reconfigure a bit of how we do business and make sure that we're pushing money to where it most needs to go.
Yeah, interesting. And I think it's important to take into account the needs of your corporate customers. And we've been talking about access to trade and supply chain finance for quite a while now. Would you say the utilization of trade facilities, I trade products, perhaps from a corporate perspective, is changing? So are your customers looking for more tailored solutions or different products, or perhaps to help their own customers and suppliers? What are the big trends that you see at the moment in the market?
So I guess the biggest trend of all to me is the trend away from, you know, back at the beginning of my career in the noughties. If you'd asked me what trade finance was for, I'd probably have told you liquidity, risk mitigation. I think if you said that to a big corporate nowadays, they'd laugh and throw you out of their office. You know, post 2008, we saw a very strong move towards not just risk and liquidity, but look at working capital, look at where we can support the balance sheet, as well as just providing funding and payment risk mitigation. Now you see clients focusing even more on digital efficiencies. For example, the growth in shared service centers has forced that issue, because now you often have one person in one market managing a huge complicated global portfolio of trade instruments, and they've got to have digital solutions or it's impossible. And then additionally now, perhaps the holy grail is sales growth. Clients who want to use trade finance solutions to actually incentivize their customers to buy more from them, or to find ways to compete more effectively. And then in the last year or two as well, an increasing focus on ESG and sustainability. So any combination of those goals may be in a client's own target list. To me, it's not that the solution set needs to be, you know, we don't need to have many complex different solutions. What we need is to have a set of basic solutions that are really flexible. They must be designed so that they can be customized around the client's goals. And then all you have to do is sit down with the client and really understand what they're trying to do, and your solution set is ready to go.
Do you think there's, I mean, moving on from that point, do you think there's a bit of an education gap when it comes to awareness of some of these products and some of these solutions available for the corporate customers?
Maybe. I definitely think that sometimes clients don't realize what you can achieve with a trade finance solution. You know, they've been used to the traditional applications of the product, if you like. But really, that's our job. The corporate shouldn't have to understand the minutiae of how a letter of credit works, or where a draft gets used instead of an open account transaction. That's our piece. We need to go in and we need to be having the right conversations with those corporates to understand not just what they think the problem is when they walk into the room, but what they really need to solve to drive their business to the next level. And then we've got the solutions. We'll bring the correct product once we understand what they need. It's asking the right questions that always drives the right conversation.
Yeah, great. So I guess let's talk about trade finance as an asset class and alternative finance to that respect. Would you say there's been liquidity coming into the trade finance market, i.e. new liquidity, perhaps in the form of from pension funds, other investors seeking new asset classes and pools to invest in? And would you say trade finance presents itself as a good asset class at the moment?
Trade finance is an awesome asset class, but it's definitely for investors who understand exactly what they're getting into. I think generally they're, you know, because of COVID at the moment and the fiscal stimulus response that we've seen globally, there is a huge amount of liquidity sloshing around the world looking for somewhere to go. Everyone is looking for yield. Trade finance and risk assets like that are traditionally a place where you can find that yield. So smart investors are absolutely looking in that space. And this isn't just a result of COVID, that was happening before. I think what kind of falls to us as banks, you know, for example, JP Morgan, we have a very sophisticated distribution desk. We have the capability to bring in alternative investors alongside our regular panel of bank investors, for example. And we are doing an increasing number of exciting, customized, structured solutions, big deals, which are designed, to my previous answer, around what the client needs to achieve in relatively complicated ways. I absolutely think there is increasing interest from alternative investors to take part in some of that, but it's very much on us to make sure that we're explaining exactly what we're offering in terms of the credit, but also the structure. You've got to understand, I think, to invest in trade, you know, the traditional positives, the short term, the self-liquidating, the uncommitted, and everything that comes with that. But also you've got to have a good sense of the credit and the market and the diversification of what it is you're buying into.
Yeah, I think that understanding is absolutely key because, as you said, trade finance is incredibly complicated when you look at it from the many different products that are available. Let's talk about the US as an American bank. What do the results of the recent US elections mean for trade?
I think the big issue that everyone was watching the US elections for from a trade perspective was, of course, the US-China relationship. And if you look at the response of the market, I think probably the answer is not that much, to be honest, in terms of a difference. Certainly, and I think there was a JP Morgan research paper on this in the last few days, the market doesn't seem to be expecting maybe some of the tariffs that might have materialized under President Trump to necessarily happen under President-elect Biden. But other than that, you know, I don't think anyone's expecting those tensions to go away. And the decisions that corporates are making around those tensions with relation to where they buy from, where they sell to, the direction of perhaps investment in their supply chain, those are big decisions that people make with, you know, a 10-year, 20-year time horizon. And I don't think anything has changed that's really going to suddenly cause a shift in those kind of decisions.
But I guess what hasn't changed or what's remained consistent is the uncertainty and the volatility that we've seen probably over the last 24 months or so, particularly, as you said, with regards to the US-China trade war, etc. How does a lot of that uncertainty affect corporate buying decisions, treasury functions, and also their decisions with respect to access to trade and receivables finance as a whole?
So I don't mean to be repetitive, but again, I think the answer is not nearly as much as I expected. I think, you know, when lockdown really kicked in sort of March, everybody was struggling with getting from the office to working from home. You know, JP Morgan moved basically the whole population home over a weekend. Many of our corporate clients were doing the same. You would frankly have expected a lot of those conversations to just come to a screeching halt. People didn't have time or energy to deal with big projects. But although there was a temporary slowdown, it picked back up really quickly. And actually, you know, the circumstances that we find ourselves now only drive, I guess, the corporate need for working capital, for liquidity, for making sure their counterparties in their supply chain are okay. They only drive that more. So actually, I think it's a real compliment in many ways to the corporate world, how effectively people managed to switch to working from home, because those conversations picked up very quickly. And we've actually seen loads of projects moving forward effectively, some of them being accelerated because they're needed more than ever now. We've seen, you know, new RFPs being launched, big new projects being picked up. So I've really been amazed that if anything, demand's gone up.
No, very, very interesting. And I guess let's go into a little bit more detail about some of those rapid changes that have perhaps been forced onto the bank and also some of the corporates, particularly with respect to the physical restriction of the movement of people. We're starting to say that trade digitalization has been on track and on a course for quite some time now, and I guess we really have seen a bit of a rapid acceleration since the start of the COVID-19 pandemic. What are the wider opportunities around digitalization here? What does that mean for JP Morgan? And what actually needs to be done, in your opinion, to start thinking about some of those big questions around how do we fully digitalize trade finance?
Yeah, so I'm a little wary of kind of overselling the, you know, the pandemic drove everybody digital kind of pitch, because I think when we look back on this in a year or two, it may not have been quite as dramatic as it appears now, but for sure, everybody who had been resisting for whatever reason having a digital channel set up with their trade bank, or indeed, I guess, with their freight forwarder, their shipping agent, anybody else, they had to figure out an alternative very quickly and under not very ideal circumstances. We rolled out as an emergency our electronic presentation solution for LC documents to more countries than it was previously available in. We had some advancements rolling out for our online banking system anyway, but one of the ones that was really well timed was Trade Express Inquiry, which is a tracking tool effectively for trade transactions, which is accessible to any party in the transaction. So we certainly had to respond. And indeed, that response is ongoing. And nowadays, if we're setting up a new trade relationship with a client, we do politely put them under a bit of pressure to sign up to a digital channel. They don't have to use it. If they want to send us paper day to day, that's absolutely fine. But as a continuity of business option, we don't want to get caught out again. You know, some markets had extremely strict lockdowns, as you know, couriers couldn't move. We never want to be in that position again, where we might not be able to unstick a transaction that was stuck. And certainly the response from clients has been pretty friendly to that. As you can imagine, it's in their interest as much as ours. I do think that where there are sort of the future looking trade solutions out there, you know, the blockchain consortia, Swift File Act, for example, which is one that we've completed a POV for during since the beginning of this year. There has definitely been anecdotally an increase in take up of those solutions. Has it been enough to solve the fundamental problem, which is the usual consensus problem, which is until you have all the trade counterparties in any one single transaction, from the buyer to the buyer's bank to the seller's bank to the seller, the freight forwarder, the shipper, maybe the insurance agent as well, until you have all those parties on the same digital platform for one single transaction, you cannot digitize even one from end to end. What I think is really hopeful is the move from those platforms taking a kind of one platform to rule them all approach, that they want to be everything to all parties. And I think the increasing growth of some of those platforms that are niche, they're targeted very nicely at specific types of client of corporate who really need particular solutions. And in future, I think they will interoperate with each other. And then you have something that is scalable very quickly. And I'm very hopeful about that direction, because I feel like then at last, we might be able to really accelerate the digitization process.
Yeah, absolutely, and definitely something that we published in our WCO TFG Blockchain for Trade